Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 13th of March. It's been a bit of a mixed handover from the Asian markets overnight. The equity markets certainly have opened fairly negative, well, sort of mixed to negative. The DAX is basically flat, FTSE slightly lower, but the FX markets have actually pushed on in an improvement in risk appetite, and basically the Chinese data that came out overnight was fairly weak. Both industrial production and retail sales both missed estimates. This is the this retail sales number that you've got here, and it doesn't need me to tell you that this is on a significant downward trend now. But the missing estimates of 13.5% there for the year, and the pressure is certainly on to the downside in those retail sales, but also the industrial production numbers missed estimates as well, and that certainly took any sort of shine off the Asian equities session anyway, and that seems to have been the hangover into the European session as well. However, there has been a significant improvement in risk appetite for the currencies. The New Zealand central bank was the first developed world central bank to start raising interest rates. That came last night, and up to 2.75%. Also overnight we had stronger employment figures out of Australia as well. So those two dollars, Kiwi and Aussie dollar, both strongly higher today, and you're seeing also euro and pound higher as well. So you're having some certainly an improvement in risk appetite in terms of the currencies, but not so much on the equity markets today. The key data that we're going to be looking out for today is certainly going to be the US retail sales, and they come out at 12:30 today, so just watch out for that. And also at 12:30 you've got the weekly jobless claims as well. 323 was the last week. It's coming in for the expectation of 330,000, and that also could have an impact on the dollar this afternoon. My chart of the day that I'm going to look at is the euro sterling. Now, euro sterling has had a significant improvement in the last few days, and what we've seen now is that this downtrend that's been in place since July, this is on the daily chart, the downtrend has been now broken decisively, but also you've now broken above this 83.50 key neckline resistance, and now that has completed a base pattern, which certainly would suggest that you're going to see further recovery in the euro sterling chart. The initial resistance band, or the next key resistance band, is around 84.66, and that coincides with the 84.63.50% Fibonacci retracement of this big July to February sell-off. So that seems to be where the euro is coming back to on this chart. The 38.2% Fibonacci retracement would certainly be the next resistance. That's at 83.90. Also with these a couple of highs back from December and January as well. So that seems to be what the euro is undergoing at the moment. On the intraday chart, you'll certainly say that the euro remains very strong. These momentum indicators are all in bullish configuration, staying nicely above the zero line on the MACD lines, and also above 50 on the RSI. The 55-hour moving average has become the basis of support as well for the euro sterling as well. So that is currently at 83.48. So you'd be watching out for any dips in euro sterling for a buying opportunity. I think certainly that's what the outlook on this chart is suggesting anyway. So I wish you good luck in your trading on euro sterling today, and I will speak to you later. Thank you very much.